Welcome to the Millionaire Mindcast, where we broadcast weekly interviews with millionaire minds from across the globe to empower you on your journey of unlocking a rich and fulfilling life. It's time to unleash your millionaire within. Now, here's your host, Matty A.
What's going on, guys? Welcome into another episode of Wealth Building Wednesday. Dude, we're getting better and better at synchronizing on that. This is where we talk all things money to help you on your march to $1 million and beyond. If you are new to the show, be sure to head over to go.millionairemindcast.com to enter our monthly contest and giveaway of over $1,100 in prizes. We got all kinds of good stuff. Visa gift cards, books, planners, courses, coaching calls. All you got to do is head over to go.millionairemindcast.com and enter a question that you want us to answer on the show. With that being said, we also got some exciting stuff. This whole coronavirus is throwing a little bit of a wrench, or at least trying to, in our wealth camp.
Yeah, I'm not canceling anything.
Well, the nice thing about our wealth camp is it's 10 people and under at a 5-star luxurious cabin up in beautiful Lake Tahoe.
And guess who gets to choose if it's open for business?
This guy. And we're going to be doing some great stuff. We got an awesome itinerary lined up. If you want more information on our upcoming wealth camp, text the word wealth camp to 844-447-1555, and it'll have all the information there about the event details. Dude, all right, so this last week has been nutso. Historic stuff going on in our world right now. We're not just talking about the U.S., we're talking globally. Obviously, we dig in on more of a micro level with what is going on in the U.S., the financial markets, implications of how that might ripple or trickle into other areas of our economy, of our psyche, of our lives. This is a big disruption in general to lives.
No, absolutely. And the thing that's kind of worrisome is we have so many outside factors kind of working against us. We got the coronavirus not only here but abroad. We have Russia and that whole oil spat going on over there. We have our constant issues with our, over in Africa, over in China. Developing markets like India are having issues. We have our other political issues with Iran. So you have all of that, all the normal stuff that already is going on, and then you throw in the fact that it's an election year.
Yeah.
So it's pretty hectic right now as far as investing. But the good news is, if you're long term, it's really not that big of a deal, because if you are a long-term investor, meaning you don't need your money for 2 to 3 to 4 to 5 plus years, or especially if your time horizon would lend you to leave your money in the said market for 10 years, then you don't need to worry about the market volatility. And in fact, I would argue that you should double down on your positioning in the market, or in something that indexes the market or something, because you're simply going to be picking up index positions or positions in the market, as be it a stock, ETFs, mutual funds, what have you, at a low cost. If you go look at almost any quality stock at on an analyst report, like on Morningstar, a lot of them are 4 and 5 star rated on there. Hey, this is a good time to buy, and all the analyst reports on them say buy them, because they have a huge potential upside. So the people that are diligent and are taking their money that's on the sidelines, that's ready to be invested, not out of their emergency funds, like I was saying earlier, just areas that are already invested to move, like bonds, it's a great time to get into equities. And it may not be the bottom of the market, because nobody really can predict the absolute bottom of the market, but it's still a wonderful time to get in on equities, because at some degree they are on a discount. And you may not get in at the very, very, very bottom, but you're definitely getting them on sale.
For people that are going, real quick question, Morningstar, a great resource for people that don't know what Morningstar is or how it can be of value to them. What is that?
Morningstar.com is a third-party resource that you can use for free to a very high level of degree, and then they have some additional paid services like getting analyst reports. I pay for a small amount, it's like $150 a year to get the analyst reports above and beyond what we have our internal staff. And it just has a lot of nice articles, really high quality information. It's used by a lot of advisors as a way to aggregate information on investments, and they're highly trusted and confided in from the public, from the retail side, and from the professional side to give unbiased information, because they're not really paid directly by any investment company. If they charge money, it's generally to advisors like myself to use their platform, or users to get their newsletter to some degree.
So it's a valuable resource that really has a lot of data you guys can use to help make educated decisions about the financial markets and the companies operating within it. So with a lot of people going, what if they have dry powder or some cash available right now and they're wondering, should they be getting in? You're saying...
Wonderful time to get in. I'm not saying it's the best time to get in because I don't know that, but I also know that it's not a bad time. I do know that. That being said, you should expect, if you do get into equities, some volatility for the near to mid-term. But long-term, you should expect to not only profit from that move, but do a lot better than if your money was just sitting on the sidelines. And I would argue the sooner that you get in, the better. Because even if you don't get in at the bottom, it's likely that you'll get in and maybe get a dividend paid to you, which buys even more securities. But as long as you invest money that you are willing to, and it's always said this way, lose, you could definitely long term make a good profit. So I have a lot of my clients calling me, asking me to put some of their monies that were maybe in fixed income securities, which are bonds, into equities. You need to make sure you talk with your advisor, whoever that is, or talk with yourself or your tax professional or whatever to make sure that's a good move for you. But for myself personally, I am personally purchasing equities for my own accounts, and I think it's a wonderful time to do so if you have the wherewithal to know what to pick and you understand the risk associated with it, because you can't lose.
All right, so let's back up a little bit. The last week in general with the coronavirus changing, the narrative changing rapidly, almost hourly, what it felt like last week, big businesses and industries just completely shutting down. Mm-hmm. Obviously, we're talking millions and billions of dollars being lost, has some kind of effect, right? Mm-hmm. Impact on the psyche of the average American and consumer. We're seeing 3 trading halts on the stock exchange over the last 7 days, the biggest drop since 1987.
I know there's been at least one halt in the futures market as well, which the futures market is what starts trading at about 3 p.m. Like Sundays is a big day that a lot of people look at the futures market because it shows kind of Fridays and Sundays.
Yep.
What the implied market open could and should be. That's kind of what futures will tell us. The future. Kind of cool. Mm-hmm. There's our little crystal ball. So I got a crystal ball to some degree, but no. I just am overall thinking that this situation is more so, like you're saying, fear-driven, emotionally driven. Because still underlying to all of this, guys, we have to make sure that we keep emotions aside and know that we've been through many viruses, many viruses since 2000. I can think of at least 8 or maybe even 9. And we're all here today. And we've also, and I was just talking with Matt's mom about this. She's went through the market crash of '87. And here she is today, and she knows it was rough, and she did the dot-com bust, and 2008, and now 2020. And everybody needs to understand that.
Can they hear his mic?
Yeah. Back into this, there is a way out in a positive light, meaning that as long as you have a set of principles and rules and you follow them, you should long-term mitigate those losses and recover from them.
So there's definitely going to be a short-term impact, right?
No doubt. Yeah. There has to be.
Okay, so in your opinion, break that down a little bit, because some people, we're hearing the word recession, bear market, right? Some, I guess.
We're in a bear market right now.
Yes, correct,
We're in a
right?
bear market, yeah.
And when
the
you
bull market ended on the Dow about just 2 weeks ago, and about 12 days ago for the S&P. Once they drop 20% off of their 52-week high, the bull market's officially gone. So the bull market of the past has officially ended. Now we get to find when the next one begins. And in my opinion, and in the large view of most analysts, this is going to be a very quick snap down of the market. It will continue to go for the foreseeable time right now.
give us 90 days, 120 days, 6 months?
I would say I'm hopeful that it's 6 to 8 weeks.
Depending on how the administration and just overall confidence of the U.S. consumer
it's going to come down to
responds.
Yeah, it's going to come down to consumer confidence, I believe.
Yeah.
And so what the Fed has stepped in and the government has stepped into the level that they can and employed their quantitative easing. It's now time to see if the consumer will be reactive to that, and if that's enough of a catalyst to flip the market back on its head. I am of the belief that it definitely is. And I believe that in 8 weeks from today, and I'm hopeful, this is not guaranteed, I'm just hopeful that in 8 weeks from today, not only will the market begin to turn on itself, but this will start becoming a thing of the past. And we're going to be talking about how Joe Biden and Donald Trump are running against each other. And then in 3 or 4 months, nobody will talk about this anymore. Just like H1N1, just like SARS, just like swine flu, and just all of that will go away. And it's just unfortunate because the media, it is very serious for the people that have been affected and that are being affected. I don't want to take away from the seriousness of it. But when you over-report or over-exaggerate on stuff, it causes widespread panic, and then you get these shutdowns. And then what ends up happening, the ripple effect, which people don't take that into consideration a lot with their actions, you have these small businesses and these medium-sized businesses that are going to really ultimately suffer due to media being greedy, in my opinion, for clicks and views.
It's going to be really interesting to see the narrative moving forward. And I was saying this in general, guys, you got to be more now than ever, you need to be very diligent about where you're getting your information from, who you're getting your advice from, who is really influencing not only your mindset, but your actions that you're taking, because those are really the two things that you can control in this current uncontrollable, uncertain, fearful, panic-driven time, is your mindset and your actions. And I would second that. I'm sad on many fronts that it's gotten to this level, and the snowball is still rolling. So I think that's something we don't know what that is going to look like once it finishes. And I'm also very excited in the sense that these are the times that investors and individuals who plan and prepare and equip themselves with the necessary resources and education and relationships level up in their lives and in their businesses. It's the lion and the sheep, right? And oftentimes, if you don't take control right now to have both hands on the steering wheel of all the things that matter most in your life, your finances, your business, your team, right? All of the things that you can control, you're going to end up being one of the sheep. And so I'm sad because I know there's a lot of people that don't have any control over what is going on that are going to get really hurt and crippled and impacted and affected by this. And of course, optimistic as an opportunist and someone who's always looking for ways to, level up and further my own career and build a bigger business and a bigger impact in the community and all of those things, right? But it's a crazy situation right now. So I think right now is the time to take the data that's being given, right, and look at your goals and what you're ultimately trying to accomplish and by when, and start playing the game. I was on my mastermind group, Go Abundance, and they had an emergency call yesterday because let's be honest, there's a lot of information out there. There's a lot of people talking about doing this and doing that. And, plugging into the right narrative and the right channel is important. And so I got on with a lot of people who have been through 3-4, economic cycles like this and have seen things like this before, haven't seen certain things like this before. But right now I would say it's, the dust is still settling, so we don't necessarily know the best way to play the game at the moment, right?
Yeah. The only thing that we can, stocks are, no doubt, equities, the market, are the most volatile short-term investment that you can ever be in. It's been proven historically that is the case. So it's not for the faint of heart, to say the least. But we do also know, to go the opposite there, we do also know that the best long-term investment historically is a diversified basket of U.S. equities, and then coupled with the number 2 best investment, which is real estate. If you put those two things together, 2008 real estate was a terrible, terrible, terrible place to have your money. But I would also argue that if you bought in 2007, it would be a terrible, terrible, terrible time to let go of that investment. Flip that on its head now, real estate has been, for the past 11, 12, and foreseeable in the future, one of the best places to have your money.
Yep.
And right now, while equities are on their head spinning, real estate's doing fairly well. On the investment side, as far as funds, from inflows of cash to REITs, and as far as people still wanting to purchase real estate, tangible real estate, because leveraging money, as for long as you can find a lender that has good liquidity right now, is going to be very cheap.
Yeah.
So I would argue that, yes, this cyclical time is not fun to go through, guys, but it also is necessary for a bull market to reprice itself in. And you have to think about it almost as a lot of people, if you show up to something late, you're on the sidelines. This is now pulling that starting line back to where you are and allowing you to get in on the race before it's too late, before you're like somebody who's maybe gotten in the market 2 years ago and you've had 2 years of good returns, and now you're giving almost all those back. Maybe if you get in now, you'll have 5, 6, 7, 8, 9, 10, 11 years return of good returns like we have had. And then you'll be able to say, okay, well, I can weather one of these storms because I'm ready for 7 to 8 years of good. I can take 4 to 5 months, or in this case, in my opinion, 2 to 3 months of bad. Then I can get in so I can prepare for that, have a little bit of cash on the sidelines, not my emergency savings, my investable savings. And then when it's time to move out of lower beta asset classes into higher beta asset classes, when the market goes down, I'm going to do so. And I'm going to profit long term from that. That's what the wealthy do. That's what Warren Buffett does. That's what Bill Gates did.
Warren Buffett, Bill, all those guys are looking super smart right now, even though, of course, we all know how smart they are, but sitting in the cash that they're sitting in.
Think of Apple. What do you think Apple's doing right now? You think they're just sitting on that cash? I guarantee you they're buying businesses, or at least starting to talk about buying businesses. Berkshire Hathaway has a ton of cash right now. I can tell you they deployed almost $1 billion in February when the market started to not look so hot, to buy Delta Airlines stock. And I think the Oracle himself would tell you it's a wonderful time to get in the market because there is blood in the streets. So obviously you need to do your due diligence and work with an advisor, be it myself or somebody else, to help you make those decisions. But it's a good time to consider doing so because things are on sale. Wouldn't you say that some of your best, most wealthy real estate investors got their a large sum of their portfolio in 09, 010,
9, 10, 11, 12.
Yeah, 9, 10, 11.
Yeah, I mean, you just had to be one of my favorite quotes is smart enough to believe and dumb enough to execute. Like, if you believe in yourself and just get after it every single day, if you hit the right timing in certain cycles, you just have to be in the game to be able to obviously reap the rewards and benefits from it. But I think right now, especially more now than ever, to tie back into Danny Burgess's comment here on our Facebook Live, is you got to control the narrative that you're opting into. Calm heads prevail. Plans and execution are going to be extremely key right now. And, you know, with your question, and I'm curious what your take is on this, do you think this is different than any other time because of the new age of info sharing? Are there things happening that, yes, the data might say this, but because of the technological landscape and how quickly word can travel and how quickly things can shift because of that, is there something different, a variable in this equation that could be?
Yeah, if I just take that at face value and I say, I think there's two sides to that, to answer that question two ways. Obviously it's a yes. So I would say that information travels faster and that can cause fires quicker. But I would also say that the resolution of those problems travels faster and that can put fires out quicker. So I think what we get is a sharper bell curve on reactions, as far as where normally, I think people have probably seen this on the news. You've seen the smoothing curve for the healthcare system, where it has that line hey, we want to stretch out the cases over a long period of time so we can handle the influx. What I think we'll see with the advent of the information sharing, it's Danny, right?
Yeah.
Like Danny had just mentioned, is the bell curve on that is going to be a lot sharper up. What that means is the curve itself will have to shorten, because that's just the way that those things
the
work.
velocity of how things travel is going to be obviously much more frequent.
So that would also tend to say that possibly and maybe markets are going to react that way for the future, because information travels that much faster. The advent of investing and being on top of your investments over the last 10 years has been very, very, very forward and progressive thinking. And so I think not only are people going to react quicker based on information that they hear, but I think we're going to be able to resolve those issues quicker based on information we're able to glean after putting things into place. So the negative effects are kind of what we're seeing when the market, people buying toilet paper, the shelves being lower or dry, and grocers that we're used to seeing a lot of stuff in. But I think the flip side effect to that is also that we get through these turbulent times a whole heck of a lot faster than we would have, say, 30, 40, 50 years ago, because when something is done,
No, that makes total sense.
the information gets to the public almost instantaneously.
Yeah.
So that's why, I'm
That's a
not
really good point.
I'm not so worried, because we've gotten through this before, and we did it when data was still being transferred quick, but nowhere near as quick today. And the next thing that happens in the some odd years in the future, that will also, have its own set of
The
difficulties.
velocity of information,
Yeah.
I think, is it is an interesting point to take in, because it might have negative impacts, but it also might have very positive impacts.
Yep.
As well. Yeah, that's crazy.
So the sharpening and the velocity of that curve may even go higher, but then that also just means that the impact is more sharply felt, but the impact is felt for a shortened period of time.
Yep, for sure. Definitely things to pay attention to. And you got, obviously, coronavirus leading the way, oil, the Fed dropping rates and quantitative easing restarting. This is, there's a lot of, I guess we should talk about at least some of the impacts that it's going to have, being that, 5 recession triggers. We're talking U.S. consumer confidence, small business confidence, jobless claims / unemployment, mortgage activity, and then this whole election thing, I think, are three big things that could tilt the scales potentially in one direction or another.
Unemployment's at an all-time low, so even if it goes up by 1%, we'd still be back into the levels that we were through the previous administration.
It's going to go up, don't you think?
Yeah,
I mean, it has to.
Yeah, small and medium businesses.
You hear small restaurants laying employees off, service-based industries getting crushed right now. There's going to be a ripple effect of what's happened with the coronavirus on small businesses. Now, a positive thing, if you are a small business, you are struggling, go over to SBA.gov. There's more information on some of the loan programs that they are actually releasing, disaster loans up to $2 million per business.
On 30-year terms.
On 30-year terms, I think the rate was 3.75. If you're a nonprofit, 2.75. So the cool thing about all of this that I have seen, and I was trying to think of what are some of the positives, there's a lot of this negative shit. I always want to be a voice of positivity, a glass half full, optimism, over pessimism. And there was a thread in one of my groups the other day that I thought was really interesting. We were talking about all the positive things. Well, number one, I think is this is an opportunity for all of us to stop and think what's most important. Number one is our health, right? Like put your health first, the health of yourself, the health of your family, the health of your neighbor, your employees, your customers, your community. It really makes you think about what's really important. Obviously slowing down a little bit too with people kind of being forced into quarantine, and the recommendations that are being put forth right now is, I've been spending more time at home, and I'm always pretty intentional about the time I get with my girls, but I can say it's been nice to know that a bunch of other people are doing the same thing as well and spending time with the people who matter. Another interesting one that I heard positively was the fact that we're lucky we're getting to practice on a disease that isn't as deadly and disastrous as it could be. Let's just use Ebola, for example, 50% mortality ratio. If this happened and that was what was going on and we've responded the way we responded thus far, we'd be in a lot greater trouble, So I think there's a lot of positives that can come from this. And I think we all have a responsibility now more than ever to be more disciplined on the things that matter. Tighten the belt financially on things that you may need to tighten the belt on. Be more optimistic and positive during these negative times. Be, focused on the right relationships and the right people. Now more than ever, I'm doubling down on relationships. And having the right people around you during times like this, again, positive versus negative can be a very unproductive and destructive thing, or a really exciting and opportunistic thing as well. So I'm doubling down on relationships. I'm definitely doubling down on both hands on the steering wheel, doing what is necessary during times like these, because there is going to be, in my opinion, some blowback from all this. You just can't deny that there's going to be repercussions from everything that has taken place. At the same time, there's going to be a lot of opportunity there. I think we're going to see some, switching over to real estate for a second. The nice part is the Fed dropping the rate is them saying, like, come on, guys, let's keep this ball rolling. We got your back. Don't be scared, right? At the same time, depending on this narrative of fear, if there's a shitload of people that are worried about losing all the equity in their homes or them losing their job, and all of a sudden we see supply kick up a little bit in certain markets around the country and the demand doesn't keep up with it, we're going to see prices cool down a little bit. So pay attention to variables like days on market, month supply of inventory, the overall absorption rate of markets going on the market and actually being consumed into the market.
Sorry.
Yeah, no, you're good. I was going to say those are kind of some of the main things that I'm keeping an eye on, being that will also, in my opinion, present some opportunity. I think we're going to see some distress.
I think that if there was a better time for any sort of inventory stress on the market, why not right before mid-April, when historically it is one of the best times to be a seller of a home. And I think that, coupled with it being, because if prices are down, it would be a bad time to be a seller, but a good time to be a buyer.
Yep.
That may be a resistance level enough to kind of say, bink, no way.
Yeah.
And keep the prices stable as long as we can shake out of this, like I'm assuming, in the near term, 6 to 8 weeks. If that can put itself on its head, I think that would really help the real estate market stabilize itself. But I, as I said earlier, am still fairly bullish, I think even more so than yourself, on the real estate market. It's much less on fire than I believe the equities market will be for the short term.
Yeah, I think in general, I'm still waiting for it to shake out, to be honest. I think it's a great time to be a seller right now. Mm-hmm. It is, I'm not saying a bad time to be a buyer, but making sure your numbers really pencil right now is going to be extremely important, depending on what kind of product you're going into. Like, I'm buying right now in escrow on a commercial strip center. That is all small businesses. It's a Class C commercial strip center, small businesses. You might be, and I'm doing this on my other commercial strip center, needing to get in front of some of these things, like work with some of the tenants. You'll see big cities like New York and LA basically prevent evictions from people being impacted by being unable to pay their rent or their lease requirements. So I think some stuff is going to have to play out and trickle downhill for a few months, and then we're going to see a lot of investors and larger institutional capital get back to work. Like you said, some pent-up demand that we'll probably see in the stock market as well, based on what I'm hearing from people like you. But it's an interesting time, and at the end of the day, here's what I will say. If I had $1 for every time I heard somebody or I myself said, if another 2008 comes around and or something close to it, I know exactly what I'm going to do and how I'm going to capitalize. And this is it, you guys. We are in historical times right now. There's going to be a massive wealth transfer that occurs in this. So yes, of course, I never want to see people getting hurt through these kind of economic cycles, but that is also the nature of the beast in the world we live in. And there's going to be some real opportunity that comes out of it. I want you guys, the listeners of this show, to capitalize on that. So what are some of the things that you could be doing? Paying down debt, making yourself a strong borrower, having a lower debt to income ratio, having some cash on hand, or having strategic relationships and alliances. When I say I'm doubling down on my relationships right now, I'm going on the money raising train. I'm consistently looking for deals in real estate, knowing that if I find those opportunities, there is going to be a lot of dry powder on the sidelines looking for safe, tangible investments that get them a strong, solid, consistent return over time. And if you're the person who can find those opportunities, there's going to be a lot of cash, obviously deployment opportunities as well. So having those relationships, painting that narrative. I heard Grant Cardone say this, and I know you love Grant Cardone.
Love it.
It was funny, actually. The other day, somebody tagged you and I, or maybe it was just me, on a Grant Cardone post saying, I want to see you and Ryan Breedwell go at it on the Millionaire Mindcast.
I'm ready, man.
We'll digress on that for a second, but one of the things that he does so well, and I think now more than ever, if you're a real estate investor or real estate professional or really just someone looking for opportunity, is promote. He was saying in regards to a documentary he was watching with Bob Hope, and the one question Bob Hope asked himself every single day that he attributed all his success to was, every day when I wake up, I ask myself, what is Bob Hope going to do today to promote Bob Hope? And now it sounds a little self-serving in some capacities, but at the end of the day, the people who are obsessive and evangelistic about what they're looking for or what they believe in are the people who often get the followings or get the opportunities brought to them or see those things transpire in their world. And so right now, more than ever, is to start throwing out the lines into the ponds that you may want to be fishing for, because you may not necessarily want to hook one yet. Maybe you do, maybe you don't, depending on what you find, but you want to at least be equipping yourself to get in the game and know that opportunities are going to rear their heads, because there is going to be distress, there is going to be hardship, and whether it's finding subject twos or mortgage wraps or seller carries or creative options or just outright purchases, I'm very bullish that there's going to be opportunities that come in the real estate space. So we don't necessarily know what it looks like right now. You may want to be cautious over the next few months to see how this shakes out. But there's going to be some opportunities for sure.
Yeah, no, definitely.
So with that being said, I see we got Mr. Lenny saying, I'm ready to get to work.
Lenny.
Learn a new skill, add new knowledge. Absolutely. This is nothing like 2008 or 9/11 or any of it. You were right about the opportunity, though. Yeah, so I think in general, now is a great time if you were somebody that was trying to position themselves on how to navigate the next 60 to 90 to 120 days. What do you tell them to consider doing?
Well, that's a hard one because it's going to be pretty specific to that individual. Anybody listening that wants to have that call, you know how to get a hold of me.
How can they get a hold of you, Mr. Breedwell?
on my Instagram. You can go on there. My handle is @rbreedwell. You can send me a direct message. My email and cell phone are on there. My email is ryanbreedwell@capitalplanninggroup.com. Cell phone is 707-372-2207. Conversations just has to be had. It's probably going to be for a general kind of cookie cutter. If you're looking to get in, per se, and you're talking about in my world, what's an amount of money that you're willing to get in with? What's an amount of money that if you got in, you could stay in? And what are your expectations and how long until you need that money? Even for people that need funds, myself for my brokerage account is for emergencies. It's down, 20 or 30% right now, but I'm still putting money into it because I know in 3 months or so it's going to rebound on itself, and I'm going to have way more money than I had. So it's how much are you looking? It's kind of your story. What does your story say? What does your picture say? And then how do we tailor that to try to meet your needs? So it's kind of a specific question.
Yeah.
But a cookie cutter response is kind of what I just said. How much are you willing to get in with? Because knowing that when you get in, you need to stay in. And then what type of plans? Tax-free, taxable, long-term, short-term, mid-term, stuff like that.
I would say take this time right now to get your financial house in order and be really, really confident in knowing exactly what you're working with, and based on where you want to go, what you have to work with, and or what you need to do in order to have permission to jump in the game. I think that's the one thing I always tell people to ask themselves is, what does it take to earn the right to do X, right? Whether you're hiring an employee, whether you're trying to buy an investment property, whether you're trying to jump into the real estate market, whether you're trying to lose 25 pounds, like what does it take to earn the right to get that result? So if you can get clarity on that and kind of reverse engineer an action plan and just have the discipline to execute on that. Discipline, I think, is the word that keeps coming up for me right now more than ever, being that there's going to be a lot of distractions, a lot of different things that are being set out there, a lot of hooks that are probably going to be trying to get in you and pull you in one direction or another. And the people who stay calm, stay disciplined, stay focused on the plan and execute on the plan and the things that really do matter right now that you can control are going to be the ones who come out of this not only more weaponized, but more confident, and also the ones who have capitalized on the opportunities.
Yeah, on top and ahead.
Yep. So we got one more question that's coming in here real quick. If you guys want more information about Wealth Camp, be sure to check out Wealth Camp details by texting the word Wealth Camp, all one word, to 844-447-1555. Before we wrap up today's episode, Patrick Cullinane asked, Pat, what's up, my brother? Great to hear from you. How long of a lag do you think there will be for real estate? In other words, when will this trickle down to opportunity in your mind? Well, it's funny that we were just kind of talking about, in general, social media. So at least, like, I would say 4 to 5 years ago, 6 years ago, this was my feeling based on the data that I was studying, and what I was seeing was when there were little dips in the market, it was usually 90 to, let's say, 180 days, 3 to 6 months before the general public actually felt what was going on and then scrambled to make decisions. And then we saw things do what they did beyond that. I think now, because of social media and because word can travel so quickly and because there's such a big spotlight on a lot of these things now, it can travel a lot quicker.
Yeah. And I'm like a fan of that because it also helps the back end that it resolves quicker.
Correct. So I think in general on this one, it's hard to say because we still don't kind of have a clear idea of the timeline of this getting under wraps, therefore people being able to respond accordingly based on that timeline. However, I think we're probably looking 3 to 6 months, and towards the tail end of the year and heading into 2021, I personally think that's where we're going to start seeing some interesting opportunities present themselves based on how mortgage rates go, based on how unemployment goes. A lot of those variables I'm keeping my eye on because I know that those are going to have big impacts in the consumer psyche and how people are responding in the real estate market. So it's definitely going to be interesting. That's for damn sure. But I'm going to be keeping a pulse on that. So you guys can be sure to head over to go.millionairemindcast.com to enter any other questions that you want us to answer on future shows. And we have some exciting topics coming up that I think you guys are going to be really interested in staying in tune with, that are going to help you on your wealth building journey. Most importantly, I'll leave it with this. In uncertain times, the best way to predict outcomes is to just keep taking consistent action. If you're in the game and your head is up and you're on a swivel and you are paying attention to the right things, by being in the game, you're going to equip yourself to get on base, to get some singles, get some doubles, right? Eventually put some points on the board and become that much more skilled in the process. So taking action is going to be the best way to equip you to get the outcomes that you want. A lot of uncertainty, but it's business as usual. So be sure to tune in next week. And on your march to $1 million and beyond, we'll see you guys. Cheers.
See you guys.
Well, that wraps up this week's episode of Wealth Building Wednesday. If you have any additional questions that you want us to answer on the show, head over to go.millionairemindcast.com and submit that question. And by doing so, you also get entered into a monthly giveaway of over $1,100 in prizes. That's go.millionairemindcast.com. And if you got some great value from today's show, be sure to leave a review, subscribe so you never miss another episode of the Millionaire Mindcast. Most importantly, share this episode with someone that you know can get some insight and some value from what was talked about in today's episode. Now, if you're someone who is truly serious about building wealth, whether that's through real estate or the equities markets, we all know that you can accelerate those goals and those achievements by being in proximity to conversations, to resources, to other individuals. And you can do that by heading over to therichlifeacademy.com and join our community for just $7 a month and get involved in the conversation, get involved in the community, and be surrounded by other people who are actively pursuing and achieving the goals that you too are going after in your own life or in your own business. Or if you are really serious about elevating your network and accelerating your growth, go to ineedaccountability.com to join our 90-day accountability group challenges that are running year-round. And this is where we place you into a group with 5 other hand-selected, hard-charging wealth builders who are setting goals, who are tracking those in our software with the success mentor that is given to those 5 individuals in that group and is actually holding you accountable to tracking and achieving those collectively as a group. And if you want to know more about what that entails, go to ineedaccountability.com. Or if you are someone who is further down the path with your wealth building and you're ready to go vertical, you're ready to scale, and you want to know more about our elite one-on-one wealth acceleration coaching packages, which entails working one-on-one directly with myself or Ryan or other wealth advisors in our community, email Matty at millionairemindcast.com to learn more. Until next time, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers, my friends.